Hello, welcome to PSR, People Speaking Rail. We are those people. I'm Mike Bowden-Distel, joined with Joanna Marsh, like always. And I guess we'll just pick it up where we left off last week. Last week, we did kind of a deep dive into the reciprocal switching notice of proposed rulemaking that the STB put out. Joanna, have you heard anything interesting from any of the people that you talk to, shippers, railroads, other constituents, and just on reactions from that notice of proposed rulemaking on the reciprocal switching?
Yeah, I mean, I think a lot of it's kind of what we mentioned last week, but the two main things are, one, I think the shippers appreciate the collection of first mile, last mile data, which is what they have been calling for quite some time. So there's that element, and it's interesting because none of the press releases were like necessarily like, oh, this is a really bad proposed rule. So I mean, I think
Mhm.
they were appreciative of that element. I think what did disappoint some shippers groups, such as the American Chemistry Council, and actually the ooh, I'm not gonna get the acronym right, but the but the AFPM is American Fuel and Petrochemical Manufacturers. They actually had a similar uh, statement to ACC, which was that they were kind of hoping to that the proposed rulemaking would have a bit more of a competitive address the competitive element a little
Mhm.
bit more, because this proposed rulemaking that came out was kind of had kind of poor service as a basis for
Mhm.
yeah for you know starting up the reciprocal switching inquiry before the STB, and so they had wanted both those groups wanted to see more of the competitive element addressed, and they're kind of hoping that that competitive element will be addressed in a future rulemaking. I'm not quite sure, or at least if not a future rulemaking, some other forum with before the STB. I'm not quite sure what kind, um, but for instance, uh, SDB member Robert Primus had mentioned, that competitive element. So they're hoping for
Mhm.
something that this,
Mhm.
excuse me, that this won't be the end of things in terms of the competitive switching part. But
Yeah, that was really my sort of main takeaway as well, is that, I think the shippers were disappointed that there has to be some service failure in order for reciprocal switching mandate to be required by the STB. So if the railroads manage to keep their statistics above that threshold, or those multiple thresholds, then there's no reciprocal switching. So that's, I think, still sort of an open question. But yeah, we have some coverage on that on the site, and then we'll move to sort of the first topic here. You did a number of articles, I think two different articles in this past week on Union Pacific and the FRA, which are at odds over these inspections of rolling stock, so locomotives and freight cars in North Platte, Nebraska. There's a picture of two Union Pacific locomotives. I'm not sure whether that's in North Platte. It could be. And so what's happening there? That seems like kind of an unusual situation. I read both of your articles sort of one after another, and I thought it was a little bit unusual. But why don't you just describe that for us?
yeah, I think Union Pacific thought it was a little unusual um, because the letter didn't necessarily give specifics on what the findings were by the Federal Railroad Administration inspectors, and so there was that element. The other thing that the letter from the FRA by Administrator Amit Bose mentioned, it sounded like there was some at one of the areas within the North Platte yard. There was some resistance that the inspectors had met in trying to get to a
Mm-hmm.
certain place. And UP told me that, or at least their take on it was that they're well, one, um, there are operations happening, and so there was a concern that these inspections would disrupt operations, of course. And then the
Mhm.
other thing is that it's not as if these inspectors and UP are strangers necessarily. Um, uh, I mean, I'm not sure exactly. I'm not sure exactly like how much they are on a familiar basis, but it's not someone kind of out of the blue, that they so there has been um, interaction before, you would hope at least, between FRA inspectors and UP, in past inspections, and so this wasn't.
Mhm.
Uh,
Mhm.
so the letter kind of made it sound more as if UP was kind of more on the defensive, and that was kind of UP's take on it. Was one, we have that relationship with FRA inspectors already, and two, we didn't want the um, operations to be disrupted. Yeah, I mean, it was an interesting letter. I think you had referenced it last week. Trains did put out an interesting piece about it, kind of soliciting feedback from others within the rail industry about what they thought about the letter, and I think in general the Trains article essentially said that the people that who spoke to them said that it was hard to say exactly what was you know what FRA inspectors found, and so it was kind of hard to pass judgment. So I guess if I had to analyze things, the question then is how much of this was for show, and how much
Mhm.
of it is, I don't say legitimate, but I mean, it's just
Yeah.
I think there's yeah, I think there's pressure uh,
Yeah.
to
I guess what I found so
yeah.
interesting about your article is you talk about some of the statistics that they pulled out, and the FRA found a defect ratio of 19.9% for Union Pacific's freight cars. So they found a problem with, let's say, 1 out of 5 freight cars. And then for locomotives, they found a problem with 72.7% of the locomotives. And they said that those figures are twice the national average, which that sounds pretty bad. But Union Pacific says, well, they really didn't, we're not provided with detail on what exactly is wrong with those pieces of equipment. And there's really a range of defects from, things that are very minor that can be corrected pretty easily to things that are more significant. And normally, under a process like that, there would sort of immediately be this debriefing of exactly what needs to be corrected, so Union Pacific can go in there and correct it right away. And I guess that process didn't happen. There was a certain industry name for it. I can't remember what the name for it was, but so Union Pacific sort of felt like they were in the dark on exactly what the findings are. It almost did seem, kind of like to your suggestion that the FRA, now under a lot of pressure ever since the Norfolk Southern derailment in East Palestine, Ohio, to maybe be a little bit more aggressive on safety protocols. And Union Pacific is a little bit in the dark. It sounds like these type of inspections happen frequently. Some disagreement, like you said, on where they sort of overstepping their bounds in terms of not allowing the Union Pacific to operate the railway. I know that North Platte, terminal is one of the more important ones for their network. Just really a lot goes through there. I'm not sure if that's the largest, but it is one of the largest. So kind of, I thought that was an interesting situation. And then there was also material that came out on Union Pacific at a recent investor conference, and I thought some of those comments were pretty interesting as well. We wrote some of those notes up as well, and there you had executives talking about how there was really kind of a lack of seasonal improvement in freight volumes going from the second quarter to the third quarter. There's usually some degree of seasonality as we get sort of into the fall. They said that really hasn't happened. They said volumes are sort of flattish from the second quarter to the third quarter and down about 3%. Overall, and then we do get that data from the AAR on a regular basis, and we have sort of so in our chart and on carloads that would illustrate that. And then when they break down that total, there it is, the total carloads. This is not just for Union Pacific. This is for the entire, um, carloads originated from the U.S. And you see the white line is 2023, and that was kind of in line with prior years, 2022 in blue and 2021 in green, up until about May, and then you've seen kind of this widening gap, between those lines the last, several months. I mean, a lot of that is industrial freight, although the industrial volumes are kind of flat. Some of that the potential growth there in industrial could have been inhibited by just how quickly interest rates have risen. But there's also, some volumes down for bulk. The bulk is down, 4%. I know there's been some issues with coal service that you've written about in the coal franchise, overall, and then grain. We've talked about how far down grain is. So the bulk uh, rail volumes underperforming the industrial volumes, and the premium volumes on Union Pacific, they're down 5% in the third quarter. That's a combination of motor vehicles and intermodal. And we do know that motor vehicle shipments have actually been really strong, at least for the time being. It remains to be seen whether that's going to continue to be strong if there is, in fact, UAW strike here, which could happen pretty quickly. But intermodal has been weak overall in the industry. Have an intermodal chart from Sonar to illustrate that. If we could bring that sonar chart up, and that's really been weak all year. I mean, this is total intermodal containers for that are originated for the U.S. in total. You see 2023 in white, and sort of follows on 2022, which is a little bit of an unusual year because it sort of declined throughout the year. Usually, you would see volumes pick up throughout the year, kind of like what you saw in 2020, although that was an extreme case. So really seeing some volume weakness on intermodal. We'll say that when we break that out between international intermodal and domestic intermodal, domestic is holding up much better. Are seeing some improvement in the truck market, which is making intermodal a little bit more competitive, look a little bit more attractive relative to the highway, and also seeing improvements in rail service. There's one CPG company that we work with really closely, and they've actually converted some truckloads into intermodal units. And the reason for that is they sort of have their inventory in a decent place with some cushion. But really, sort of the main reason was they've seen improvements in rail service. So a lot going on there in terms of rail traffic. A couple other sort of takeaways from the Union Pacific comments at the analyst meeting was that Jim Vena, company's CEO, said he's confident that the Union Pacific, the mechanisms that the company has in place to recover their cost inflation and get a little bit more on top of that. He's sort of confident that he can sort of do that. It sounded like that's necessary in order to, bring in more, people, sort of notwithstanding the furloughs of some of the maintenance workers, which is something that we've written about. And then they talked a lot about safety. I think the class ones, I think, are talking more about safety in a lot of these public investor meetings, because whenever they talk about things in certain investor meetings to that investor audience, the STB seems to take those comments and turn it against them, as we've seen in some of these hearings in Washington, D.C. But Jim Vena, pretty bullish on a lot of different fronts there. I thought that was an interesting quote in your article. He says, "Well, we're going to have the best, the best operating ratio, the best service, and the best safety. We're going to be the best on all of those by all those measurements." So he was very optimistic on his railroad in that regard. And then have a chart here that I thought was interesting from that I put together from data. So the data is from U.S. Surface Transportation Board. This is new data that they're requiring on railroad service. In this notice of proposed rulemaking last week, they're proposed making these data points, mandatory, going forward, and not just on a temporary basis. Right now, the railroads have to provide on a temporary basis. We'll see if it stays temporary. But you see in late August, early September, these are the number of intermodal cars in revenue service that had not moved in 48 hours or longer. And so loaded intermodal containers that had basically been stuck someplace, fairly large number on August 30th, and September 6th. It has been cleaned up, at least to a large degree, there in September 13th. I wonder if that was related to having to hold containers, for some interchange partner in the east that's being impacted by hurricanes, but now they're within actually 6% better than their long-term average, and actually better than last year. So I thought that one was interesting as well. Did you have any takeaways from what was said at that investor conference that I didn't already highlight?
Yeah, I know. I mean, I think, yeah, you highlighted a lot of good points. I think, yeah, I was trying to figure out whether um, Jim Vena has spoken uh, publicly before. I mean, I mean, since his new
Mhm.
appointment as the CEO on August 14th. And so I'm
Mhm.
not sure if this recent investor conference was actually his first sort of public appearance, or if there was one before then. Um, but I think, kind of looking at his comments at the investor conference, and also I get back to the to, back between the exchange between FRA and UP on the focus safety inspections. I And this is just my speculation, and I could be wrong, so don't take it
Mhm.
as like, well, this is what's happening. I wonder how much of it is other stakeholders in the industry, mainly the unions and regulators, still trying to figure out exactly where Mr. Vena stands on things, because
Mhm.
they're familiar with him as being, of course, an executive at CN, but also more recently the chief operating officer of UP, until I think 29 for a few months, and
Mhm.
um, and when he was at UP, he was the one who sort of spearheaded the precision scheduled railroading campaign over there, and so I think, I wonder, whether FRA's letter, because STB Chairman Marty Oberman was CC'd on it, as well as the union heads, how much of it is trying to suss out, like, where he really stands on this, because you can say things in press releases, but what do you really think about things? And I think even, I think even the investor conference, it's kind of, I think people are still kind of looking at what is he saying, and what is he not emphasizing. Was he emphasizing? Was he not emphasizing? So I think, from my take on it, a lot of things he said sort of were assurances to the financial community, in terms of the operating ratio and whatnot. But
Mhm.
I think, yeah, there's still a big question about Mark, about, like, where he stands. Is he going to be like another Keith Creel in terms of, like, you know,
Mhm. Mhm.
uh, operating ratio is not necessarily like a bad thing. It's just, it's a reflection of how well we're doing, that kind of thing.
Yeah, I mean, it's
Which
definitely
is what Keith
demonstrated the
Creel.
ability to improve the operating ratio and run an efficient railroad. And so
Mhm.
now that there's more pressure to run a railroad with good service and run
Mhm.
a safer, railroad, even though I would argue railroad is really the safest way to move anything over the surface of the earth. There's more pressures coming from those angles. Is it still a good investment? Is it still going to outperform the stock market most years, like it has in the past, let's call it 15 20 years? It's outperformed the market
Mhm.
most years, and some years tremendously outperformed the market. So I think that's, if you can do all of those things, which it's hard to do all of those things at once. That's kind of the unanswered question. Do you want to move on to this next topic? You wrote an article also on Canadian National and Norfolk Southern unveil, what they're calling a single line intermodal service. So this is kind of a unique partnership. I do wonder if this is a competitive response to the Kansas City Southern and Canadian Pacific merger. And so, you have, it's a nice picture there of probably the Canadian, Rockies, beautiful part of North America there. But talking about how steel wheel interchanges in Detroit and Chicago, so as Canadian national customers now gaining access to the Atlanta and Kansas City markets, sort of acting like a single line. So kind of a unique, partnership. Although we have seen some other, partnerships like this, and then some of the other things you talk about here. Atlanta, origin destination pair of Toronto and Atlanta taking 3.3 to 3.7 days in transit time. I went into our FreightWaves sonar product to see if we had any intermodal volume with that as an origin destination pair. We have all this intermodal data in sonar that's based on the railroad way bills, and I really didn't see any. So that would be kind of a new, OD pair in North America. So kind of an interesting, proposed uh, partnership there. And then, I think earlier in the week or last week, you talked about another partnership of having more on dock rail from the Port of Savannah, getting that into North Carolina on CSX. So it does seem like the railroads are maybe taking a little bit more aggressive approach of continuing to have intermodal as the growth area and rolling out new intermodal services.
Yeah, and there was actually that other thing, and I'm not sure, like, it's not necessarily new news, new news, but Union Pacific and CN yesterday were, or maybe it was Tuesday, we're talking about, we've shaved off a day from our Falcon Premium service, and so get
Mhm.
one less day between, I think, Chicago and points in Mexico. Yeah, so yeah, it is interesting, how even though intermodal volumes are not as good as they could be this year, that there is, particularly this week, just a lot of intermodal related announcements.
Mhm.
Kind of
Mhm.
waiting now for BNSF to say something, but
Yeah.
yeah. Sorry.
Yeah, I mean, I think BNSF made a big announcement
Mm-hmm.
earlier in the year when they announced
Mm-hmm.
that big investment on the high desert in California,
Mm-hmm.
sort of in partnership with JP Hunt. Like that's a
Uh,
huge project that could potentially increase capacity and be one other reason why you might think intermodal is still a growth area. Talked to a shipper earlier this week that does a lot of importing through the port of New York, New Jersey, and they do a lot of that through New York, New Jersey. A lot of that goes onward to Chicago as kind of a hub. And they say sort of the key to using intermodal versus truckload is they know truckload is going to take 2 days in that corridor. Intermodal, if it was consistently 3 days to Chicago, they'd use intermodal all day long. But what they can't have is sometimes it's 3 days, sometimes it's 4 days, sometimes it's 7 days. They don't
mm-hmm.
really know, and it's kind of this sort of the consistency of the service is sometimes even more important than just the speed. Heard that from a customer earlier in the week. I want to move on to our last topic here. Is we have an upcoming show, and I think you have an upcoming article on uh, chassis leasing. So we have Dan Walsh, president and CEO of Track Intermodal, one of the big chassis leasing companies out of about three different companies that do that they're really of size. So, did you speak with him already, and what have you learned so far?
Yeah. So, um, let me see. You know, I think even though that 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 issue of the chassis shortage, I mean, even though it's not as pronounced as obviously like 2 years ago or something. Um, I think the main takeaway that I got was that even though that there's not a big pressure to ensure chassis availability, that doesn't necessarily mean you can rest on your laurels. I think it's
Mhm.
just sort of preparing. His argument was kind of not necessarily for preparing for the next sort of big sort of volume surge, although I'm sure that's something they would want. But it's also how to keep on investing in assets and in technology to to ensure that uh, that the, if there is another sort of I would say extreme chassis shortage situation, but but to prevent it, I guess, essentially from happening again. So, so that was kind of the main takeaway. It was kind of interesting too because we also talked about like sort of the how sort of changes in manufacturing globally, particularly in Asia, like instance from China to India, or so how that can also shift where volumes might come in to the U.S. So which would potentially bring more volumes to the East Coast versus the West Coast. That said, he was also thinking that the West Coast they'll probably continue to grow their volumes, although the volumes that went to the East and Gulf Coast, it may not necessarily like fully come back, but that's not to say that that growth won't happen on the West Coast. So.
Yeah, so we'll look forward to that article coming in the next few days, and that's really what we wanted to go over today, what we have time for, and hope everyone has a great day.